Welcome to Global Money Talk, brought to you by SamproTV. Greetings to all of our viewers from across the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blair, and joining me today here at the New York Stock Exchange for our market briefing and also to weigh in on the top stories of the day is Tai Wong, independent proprietary trader. Happy Wednesday, Tai. Thank you so much for joining me.
Oh, good morning, Remy. It's a good day today. Well, first of all, it's Global Cat Day. I don't want to get into the politics of cats. It's also Oscar Wilde's birthday. But most importantly, I want to give a shout out. It's my son Luke's 21st birthday.
Happy birthday.
Happy birthday, Luke. I remember very well, the day he was born, 21 years ago. And if you're a baseball fan, it was the Yankees-Red Sox Game 7 of the 2003 American League Championship Series. And a friend of mine called and said, "Hey, I got tickets, you want to go?" And I'm like,
oh my goodness.
I don't think I can go. And plus, they're probably going to lose anyway. So, it's a couple minutes after midnight. Aaron Boone comes out, I think it was the 11th inning. Wife's asleep. Actually, Luke's not far from me in this little thing they keep the babies in, the infants in. And he hits that home run, and I couldn't scream. I just went. It was quite a moment. So I'm just reliving that a little bit. It's a good day.
Well, congratulations to your son. 21 is a big birthday, so I hope you get to celebrate with him this weekend.
Yeah, he's coming back from school this weekend, and the whole family will be together, so looking forward to it.
Oh, well, congratulations, and I hope he gets a good celebration for his 21st.
Thank you.
Well, I do want to take a look at the markets today because we did open on a mixed note. We saw higher trading for the equity averages, but right now we're seeing mixed trading. So let's start out by looking at the Dow Jones Industrial Average. So the Dow is still in positive territory, up by 0.5% or over 200 points. And this does come after the declines yesterday and the rally on Monday. Meanwhile, the NASDAQ Composite Index is seeing red, and it is slightly below the flat line this morning, while the S&P 500, we are eyeing key levels here, and it is just barely positive this morning. So we do have a lot to get to, so let's start out by looking at ASML, because we saw that sell-off yesterday, and this was happening while we were on the show.
Literally on the air, we're looking at NVIDIA and Broadcom, and everybody was getting everything was getting hit, and it turns out it's ASML. It's a Dutch company, and they basically make the machines that almost everybody uses to make chips, and they have a monopoly. Nobody else makes these machines, and they're called extreme ultraviolet lithography machines. So let's go to graphic one, because I took a picture of this. I wanted our audience to see the machine that causes all these problems. So it's a pretty massive machine. $175 million a pop. The next generation is going to be $380 million a pop. And the magic of this machine is it basically etches the chips that that Intel uses, that I think NVIDIA also uses, that TSMC uses. So they're really the supplier for all the machines that make these really, really high-end chips. And the problem yesterday was, and of course it's because it was botched. They were supposed to release their earnings today, but they released it accidentally yesterday. And the bad thing about that also was they were supposed to have a sort of a call, an earnings call, but the earnings call was scheduled for today. So all people saw was, oh my goodness, these numbers. Oh my Lord, what's wrong? So you do a little bit of drilling, and it's actually not so bad. They said bookings were down for some of these machines. The market was expecting $5.4 billion worth of these machines, but they only got just over 2.6. Oh my goodness, what causes a drop like that? And you find out later on, as more details come out, that last quarter it was 2.6. So this quarter they actually, well, first of all, they beat earnings, and they edged up a little bit in bookings, but the street had expected almost a doubling for whatever reason. Maybe because they felt that there's huge demand for these AI-related chips, and it's not coming. So in addition, the company has said that we're getting a lot fewer orders because people have stocked up on chips and these machines over the pandemic and right after the pandemic, so they wouldn't run into the chip shortage again. So we're seeing AI related chips very strong, but everything else is a little soft. So people aren't buying these machines. I mean, at 175 million a pop, maybe if you don't need it, you don't buy it immediately. You can, wait, for the next model or the year after that. But nevertheless, their gross profit is around 50%, which is really remarkable. I mean, Apple, as amazing as it is probably in the, I want to say 38%-ish range of gross profit. 50% gross profit is amazing, and you can do that when you're the only manufacturer. So, but as I looked at the chart, I don't like this chart. This chart scares me a little bit. It reached a high of 1100 in July. Yesterday, I think it was trading something around maybe 850 or so, and now it's under 700. I'm not sure if we can pull up a picture of that, but if we can, it's okay. You get lower highs, lower lows. I think there's a trade in it to the lows of 2024, sort of another, maybe down to 600 or 650. But it's a trade. I think you're in there for 5-8%, and I think you want to take profit because this does worry me. I don't like the looks of this chart, and if the demand for chips other than AI remains sort of stagnant, I think it's got a little more room to go.
And Tai, in terms of price action, we're seeing ASML shares down over nearly 6% in today's session, and this does come on the heels of yesterday's losses as well. But what did you make of the accidental release of those earnings report? Because there was a lot of criticism regarding that.
I mean, in the business we call it a fat finger, right? Or somebody thought, oh, it's supposed to come, it's supposed to come out on Wednesday, and the guys go, yeah, okay, Wednesday the 15th, right, and clicks it right in. And I mean, we've had some flubs where some major data got released, the U.S. government data got released accidentally early, and it causes a lot of dislocation. I mean, this is about as a pretty big dislocation for this stock. I mean, down 15-16% yesterday, another 5 or 6% today, and it really dragged the markets down yesterday because the market was just sort of panicking, and it's hitting the biggest growth stocks. Nvidia's down, Broadcom's down yesterday. So, a bit of a fat finger. They'll be more careful next time, but occasionally these things happen.
Yeah, and I do agree with you because we do know these accidental fat finger mistakes do happen, and when it comes to unexpected events like this, there might be an overreaction. But you highlighted the volatility, right, that we've been seeing. So even yesterday when we saw United Healthcare, they were down by as much as 10% earlier in the morning, and that did weigh on the Dow Industrials as well. But we're starting to see a lot of volatility in terms of reaction, and I think it was interesting to see how much the other semiconductor names or chip makers sold off in reaction.
Yes, it really it hit the market completely unawares. And I guess the problem with single name stocks is sometimes you get this volatility, especially around earnings. As a matter of fact, I mean, I can't guarantee it, but I was looking at the chart, and there's a big gap in like early July, a big gap down. I'm gonna bet that was due to probably an earnings that came out where the stock is trading at one level and then it just gaps. There's a gap. And for those of us who've traded foreign exchange commodities, you're actually not used to that. You actually have like sort of a continuous market and a lot of different players. But in a single name stock, sometimes there aren't people won't sell options very cheaply because when earnings goes the wrong way. I mean, I remember Netflix. Remember one year, one quarter they had like negative subscriber growth and the thing cratered. I mean, if you sold a put, you'd never be able to hedge it. And sometimes when these earnings come out after hours, you won't be able to hedge it for hours, so you just don't know where it's going to come up again. So the single name stocks can be very, very volatile.
And speaking of single name stocks, another name we're paying attention to this morning as earnings season continues is Morgan Stanley. So now that we've heard from the major banking names, what do you make of the results? Any surprises?
I think the general pleasant surprise were the trading units actually did very well at these banks, and when there's volatilities or there are moves in the bond market that that sort of can be telegraphed a little bit, some of these banks can do very, very well. I also noticed, I was just looking through Market Watch and counting the major earnings that came out yesterday, and I think about 85% of the earnings beat. Some of them beat a lot, some of them beat a little bit, but only a handful failed to beat. So I think Morgan Stanley was doing pretty well this morning.
They are up by as much as 7% on the session this morning, and they're trading above 120 per share this morning. So considerable gains in New York morning trade for that name. And as we continue to await economic data that's coming out tomorrow, because that'll give us insight into the U.S. economy in terms of weekly jobless claims and retail sales. That is a number that's coming out at 8:30 a.m. tomorrow morning.
Yes.
And Tai and I will be bringing you that data point, all the data points tomorrow morning. But I do want to get your take on mortgage rates.
Yes.
While we're talking about the U.S. economy.
So the weekly mortgage rates came out this morning, and it's up 16 basis points to 652, and that's after a 22 basis point rise last week. And this is due to the fact that after I think the most recent data, the market shifted, saying, are we, it was a big bond sort of rout. I guess, rout is probably too much of a term, but the 2-year yield went above 4%. The 10-year yield went to probably 4.15 or thereabouts, and we've actually seen a substantial rally over the past few days. So next week might be a little bit better, but the other thing that was noticeable was that mortgage applications fell 17% last week. That's the biggest single week drop week to week since the pandemic. And if you exclude the pandemic, it was the biggest drop in 9 years. Now, most of that is refinancing. Refinancing dropped, I think, like 26%, where new home mortgages dropped 7%. So I guess if you really found a house that you like, and you want to buy it, renovate it so you can get into it for next year, and get the kids in the right school system, get everybody happy, you know what, a few basis points, 20 basis points, you're going to just go ahead and do it. But for the people who really got their mortgages up at higher levels, it's I think 7.99. I want to say it got up there, right?
Yeah, that is high.
Right, and now you're saying, oh, I can refinance, but you know what? They're going to continue to cut rates. I want to wait. So I think it's going to be a volatile series. I think if we get some weaker data and these things fall back, the rates fall back off, come back off a little bit, we'll get a lot more refinancing done. But it's certainly something that you don't normally watch that closely, but we're watching it today because we expected some kind of sharp move, and we got it.
Yeah, and before we move away from housing, of course, mortgage rates play into the factor, but you mentioned kids and schools, and here in the U.S., the school season tends to begin end of August or beginning of September. It's different in other parts of the world, but when it comes to college, so, of course, this is something that parents think about because the price tag for a 4-year college education and I am sure that you've personally been experiencing this because even if you stock away for your kids' tuition from a very early age, there are different plans that you can get into to plan for that key day when your kids go off to college. But let's talk about how competitive the college landscape has become, because not only are we seeing articles about counseling for high school kids, even middle school kids, to try to get into Ivy Leagues, but in addition, apparently there are also consultants that help you get into sororities or frats, and that does seem to be a very lucrative business for some people. But let's start out with getting kids into Ivy League institutions. So, do you know how competitive it is?
It's really, really competitive. I've gone through the college applications process with 3 of my kids. I'm also a volunteer in a program that helps high-performing but low-resource first-generation Hispanic kids in Westchester. You basically act as a mentor for them. And it is, the word for it, I think, it's a blood sport, how tough it is. To the Ivy League schools, you're talking about single digits, 4-5% acceptance rates. It's the same for Stanford, for MIT, schools like that. Part of the reason is the process with the Common App that came on, probably 20 years ago or thereabouts, makes it a lot easier to apply to a lot of schools than it used to be. You basically fill out one app, and depending on the school, they may have some supplemental essays, but it's really easy to go ahead and do that. And also, I think there's sort of grade inflation too. Schools have really made it easy to get higher grades, and it's sort of a sad arms race, because if everybody is doing it, and you're a school, so we're going to be tough, and it's really hard to get an A here, you're kind of hurting your own students in this blood sport unless you're really, really well known. And then the parents get angry, and then they want to pull your funding, so everybody has to go along. So grades are generally good, scores are good, because there's a lot of prep classes for it. And now the whole idea is, how do you stand out from the crowd? And it's funny you should mention it. There was a big story in the Wall Street Journal this morning about Crimson, I think it's called Crimson Education, this 29-year-old New Zealander, or Kiwi as we like to call it, has started this business that's being valued at $500 million with a ton of really smart investors. And they're coaching you from as early as middle school. Sometimes I know friends who live in parts of New Jersey. They're telling kids that if you pay a retainer every year when your kid starts at age 5 or 6, and I'm not kidding, 5 or 6, will prepare you to get to the school that you want. And it's feeding on a certain demographic of parents who really, really think that this is important. And it's not the be all and end all, but certainly gives you a leg up. Like I think of putting your kids in a top institution. They get to start at the front of the marathon, and they have to run their own marathon, but they start at the front of the marathon. So pretty tough. I would say that a lot of people, especially sort of the upper middle class to the affluent to the wealthy, are using consultants like these folks. Some are probably in New York City. I mean, I wouldn't $50,000 for a consultant for a year, senior year, wouldn't surprise me at all. So it's a big business.
It is, and you mentioned blood sports, so I think it's sort of befitting that this consulting business is called Crimson Education. And you went to Harvard, didn't you, right?
I did.
So you're familiar with the crimson color?
Right, certainly. And the young gentleman who's running this, who's the CEO, also went to Harvard. He's a real go-getter. I mean, he got his applied math major, degree in 3 years. Then got his master's. Went to Oxford. I think it was a Rhodes Scholar or something like that. But he's really, really driven. And his secret, and I think it's probably correct, as he says, find your kid something to do. If he's not at the top, half of 1% of that, drop it and go do something else. And it's the whole idea of standing above the crowd. I mean, Harvard brags that we could fill our entire class with valedictorians, and we want to do, and they can. But filling your entire class with valedictorians is sort of not interesting. So they're looking for folks who they think can change the world, right? The Mark Zuckerbergs of the world, though he never bothered to graduate. They gave him an honorary degree, but he never bothered to graduate. He was too busy, building out Facebook. But I think in the old days when I was applying to school, it was like you needed to be well-rounded, good in everything. Now it's be good enough in everything, which is still a challenge, but then stand out in something. Be 3-4 standard deviations above the mean. Publish a book, have a patent, definitely do something, in terms of public service. But you want to stand out. You want to be the, sort of the one flower or the one plant that stands up above all others, and then craft a narrative that shows that off and that's consistent. And that's how they make their money. And I think, and the same thing that I've done and with my kids and with the kids I volunteer for, it's what's your narrative? Drill in and tell a story, a compelling story.
I think storytelling is important, as you mentioned. And before I move away from this, several years ago, pre-pandemic, I remember high school students in Palo Alto were committing suicide just because it was getting so competitive, and the extent to which this was a concern. The FBI got involved because they were so concerned about this. And sometimes when you hear stories such as this, it is good for this particular consulting business, especially with all the PE interest in it. But it also makes you wonder, should kids be allowed to just be kids instead of just focusing on something like this? Like, will they really be able to get an edge in life?
I think, I really think the right analogy is you put them at the start of at the beginning, in the front rank of the runners of the marathon, and it is literally a marathon that you're going to have a 40-year career. Does it guarantee anything? No, it doesn't guarantee anything. What it does, give you is generally speaking, a pretty good education. Although, with what we've had the scene with colleges over the past year, sometimes you wonder, and I know some of the colleges, might suffer this year. We'll know later on whether some parents are saying, I'm spending $90,000 a year to send these kids, and they're out there pitching tents and saying really god-awful things. That I think has woken some people up. But also that you're in with what I like thinking is you're in with the A team. You're in with kids who are just like you, many of whom are really as driven and as smart, and you also build a network. So these people, you can call later on saying, hey, I need help with this, or can you recommend somebody? I'm starting a new business. So I think that those network effects and the education and getting the sorting effects of getting into some of the really hard to get jobs is important. Does that mean you can't succeed? If you go to some really great schools that are not the top 20, absolutely not. Look at the CEOs of America. I don't think too many people are actually Ivy League educated. It sort of doesn't push
unless you drop out.
Unless you drop out, exactly. Now, but if you're going to consulting or banking or sort of private equity, they might, or law. Law is a big one. Law that that name really counts. Then those top schools are really important. But you can certainly succeed in many, many ways.
Well, Tai, we are edging closer to the half-hour mark, so why don't we end it on a lighter note with pandas. So, two giant pandas from China arrived in Washington, D.C., and this is the first time, apparently in 24 years, that the U.S. Capitol has welcomed new pandas from Beijing. And apparently the pandas were trucked to the Smithsonian's National Zoo, and they're going to be on loan for approximately 10 years with an annual fee of $1 million. And apparently this is to support conservation efforts in China. I just found it a little touching that one of the pandas has a big appetite while the other one is apparently an introvert.
Wow. So, this is I think we haven't had pandas for several years. I think the previous pair, I think, either got old or passed away or had to go back to China. But it's a huge draw in in Washington D.C. for the zoo, and this whole thing started with President Nixon in the early '70s. It was called panda diplomacy. When Nixon went to China, and the article was only Nixon could go to China because he had the sort of anti-communist credentials to do so, and he opened up China, which eventually led China into the UN and other things. And it's always a nice thing to say. The pandas are only in China. There are probably only maybe a couple of hundred of them, so it's pretty nice to have one. And with all the rancor between the U.S. and China in recent years, and that will likely continue whomever actually wins in the White House, this is just a smart thing to do, right? And I think China would do so much better if they just did things like this instead of, because on the same day you get this news, China says, we will not renounce the use of force to take over Taiwan. As I mentioned before, if you actually said something different and said, you know what, they're our brothers. Let them come back whenever they want to. The world might go, whoa, this is a change, a pleasant change. And it's sort of moral suasion, gaining people's hearts and minds over time. But it's a nice thing, and we're glad to have it. They're really cool things to see. I mean, I actually saw them when I visited China with my parents 25 years ago in Chongqing, and it was before China got really big. And we were with a small tour group, and somebody asked, "Do you think we could see the pandas?" And at the time, it was 1999. They said, "Yeah," and they talked to somebody, and they literally drove our tour bus into the center of the zoo and gave us 20 minutes to see the pandas. So that was quite wonderful. But China was really starting its big growth then, wanted to open itself and be welcome to the West, and they did really, really well in that for probably the better part of 20 years.
Well, I just thought it was very interesting, this type of diplomacy and international relations. Apparently, the plane that these pandas traveled on, it was called, nicknamed Panda Express.
Panda
so,
Express.
yes, that made me chuckle. So, Tai, as always, thank you so much for joining me. You will be here with me for the full hour tomorrow.
Yes.
So we'll be able to cover a lot of ground in terms of the economic data releases as well as technical analysis. So make sure to watch us tomorrow.
Tune in.
Thank you so much, Tai.
Thank you.
And coming up, I will be joined by Richard Bayless, partner at Karani Asset Management, for today's Market Insights. So don't go away. We'll be right back.